Welcome back. And today we have some great content as always. Our goal is to provide value about real estate investing. And thank you for watching. So without further ado, once again, I have my co-host, Julie. How are you, Julie?
Fine. Good morning, Seewing. How are you?
Good morning. Fine. Thank you. So we have a lot to cover. Without further ado, let's dive into our topics at hand. I'm going to begin by saying that let me give you my brief background and be real quick. Then we're going to dive into the philosophy behind this particular podcast, which is about contrarian investing and dollar cost averaging. That's the crust of this podcast and not necessarily my background. But let me start off my background anyway. So I retired from the U.S. Army way back in 2002. Believe it or not, I entered the U.S. Army very young here, 1980. Yes, I can go back a long way. I'm a baby boomer, okay? And I'm proud of it. So when I retired from the U.S. Army back in 2002, then I immediately thereafter, within a year or so, the next 2 year time period, as you can see, I bought 10 rental properties, new construction at that time, the emerging market all over the country, Las Vegas, Baton Rouge, Louisiana, and Royal Beach, South Carolina, and Phoenix, Arizona, and Florida, and Texas, all the great markets. At that time, those prices were so cheap for 100 grand for those single family home. And now in 2024, those homes triple, quadruple in value.
I bet. Yeah. Wow.
So just I'm going back in history. A lot of people watching this video, some of them are not even born in the 1990s, year 2000.
Exactly.
Just going to show you, I've been there, done that. I went through many different cycles. All right, let's go on. And then I sold a whole bunch of those rentals back in 2015. I catch it in and I achieved so-called semi-retirement. And I'm still doing my job. I'm still doing my real estate consulting, but to Hawaii. And we have a very good life in Hawaii for several years. So I retired for the second time. And then I unretired in 2018. And I bought more rentals in 2015, 18, 20, 21, 22.
Wow.
I'm not here to brag, okay? Whenever I do a podcast, it's all about you out there, right? I'm trying to help you guys. I don't even mean like other gurus out there. They always talk about their personal portfolios that they have 1,000 doors, whatever that means, right? 1,000 doors.
Mm-hmm.
Anyway, when I talk about that, it's not what they think. 1,000 does not equal wealth. Okay.
Mm-hmm.
Okay. Let's leave it at that. Okay. So in 2020 and 2021, during the amazing housing boom, when we had 3% interest rate, mortgage rate, I accidentally did two flips. I did two flips with fourplex, two fourplex in Dallas. I did two flips. Then I put a small deposit and the phase one, the pre-construction back then, and then phase two, then phase three. Each phase, those builders increased their prices dramatically. At the end of the day, I accidentally, after 12 and 18 months, wow, wait a minute. The price that I locked in to pay my earnest deposit, pre-construction, was whatever. And then after phase three, after 12 to 18 months later, it took the builders so long to build up completely. Then when I closed escrow on those four plexes in Texas,
Oh, wow. Nice.
at least 30% profit, and I proceeded to sell them. And I profit, I pay my taxes. Then I took those money to go on vacations and travel. Julie, I told a lot of people, I've been to more than 50 countries. I've been to dozens and dozens of cruises, and those vacations cost a lot of money.
Yes, they do.
Huge amount of money. So therefore, look, no regrets in terms of vacation. Have a good time. I've been traveling all my life, really, not just the past 10, 20 years and cruising and been to all the countries all over the US and everything else. I'm still doing that. And so it costs money to do all that. That's why I'm still doing real estate consulting. I'm still running my business, be it part-time right now, right? I've been doing part-time my real estate consulting all these years. Some people may not know that. I do not work 40, 50, 60 hours in the past 20 years. I work 5 to 10 hours per week in the past 20 years, and mostly remotely.
Mm-hmm.
Even before remote was the name of the game back in the beginning of the pandemic, Julie. So what I'm lived through, the philosophy I'm imparting to you guys. You
Right.
have 6 rental properties and you spend 1 hour per month managing the risk portfolio.
Right.
That's a
Yeah.
practice. Why do what I do, right? And I coach and I mentor all the investors do what I've done, right? All the mistakes I've made. Anyway, those 2 accidental flips are just once, I think, in a lifetime. So now
Right.
24, no such great deal. That said, you missed the boat, right?
Yeah.
The lesson
Yeah.
learned, Julie, the lesson learned is great deals are available for only a limited time. And then when the door is closed, it's over. You cannot replicate those deals anymore. Julie, you and I have been talking about it, right? It is never a wrong time to buy investment properties, right? Ever. E-
Absolutely.
Even during today's housing challenging environment. Anyway, a lot of lessons learned, okay? Anyway, so therefore, I've been practicing for years and decades in real estate contrarian approach. What does that mean? What is contrarian? The book definition is that a contrarian involves believing that most public opinion is wrong and based on limited information, personal need, and interest. So as long as so smart, savvy investors, the true wealth builders of the world, they go against the tide. Is a go against the herd mentality. Julie, so what you take away in terms of how do you, from your perspective, how do you define contrary the way I just did?
Wow, you've talked about a lot in just a very short time. But first of all, I do want to say thank you for your service and thank you for sharing your journey because I think it's important to your audience to understand you've had a few different career changes, the military for a lot of years. And then so you haven't been investing in property since you were born, or you didn't have a bunch of property passed down to you from your family. And then, as you stated, I started a little bit later, a lot later than most people, but I think there is still opportunity. So I think that is something that I would encourage your audience. Doesn't matter if they're in their 20s or in their 60s, they can still take advantage of the market. Now, as far as the contrarian, absolutely 100% agree with it. I think Warren Buffett said it best. And yeah, if that's what he says, and he is one of the wealthiest men in the world, it makes sense.
Yep.
I think people listen to the public so much without doing their research. So I think it's important to do the research.
That's right, Julie. You and I talk about it all so many times. Listen to the house crash, doom and gloom real estate videos out there. It's a bad thing to do. Anyway, so let's move on. Real estate dollar cost averaging is a stock market term, mutual funds, right? You invest dollar cost averaging. Technical definition is you invest a fixed amount of dollar on a regular basis regardless of the economic situation. It doesn't matter. It doesn't matter if it's a recession or a housing crash or correction, this or that. You consistently put money away because that's how you will diversify cost averaging consistently.
Right.
So I apply it to using the real estate situation. I already documented all those years that I consistently invested.
Right.
When I buy properties, I'm not timing the market. It's
Right.
time in the market. I buy when I'm ready. I buy when I have the capital to do it, right? Regardless of those up and down real estate cycles, it doesn't matter to me because I invest for the long term. So what is your quick thought on that? Dollar cost
Oh, I definitely think, the point is well made that you can invest in any market. I think it's just important to be consistent. Like if you're going to invest into a mutual fund, it's consistency. It's the time in the market. It's not trying to drop a bunch of money today and get a 30% return in 6 weeks or whatever. It's like
Right.
ridiculous. But people believe that. That's why you have to go against that contrarian mindset, like you were
Right.
talking about, because
Yep.
you can't believe everything you hear.
Yep, exactly. So here's a more of an outline. It's a shame everyday real estate investors are too scared to buy pre-construction properties, even though the $1 billion moguls are doing it all the time over the years. And they take their billions and the billionaires of the world, they look for the next deal, they assess the risk involved and then so that's how they propel their net worth. Billionaires have more zeros on their back, multiple more zeros than most of us. But
Right.
still, the concept and the philosophy remains the same. You just have a good deal. Pre-construction, not right now, but like I said, a few years ago, during the
Mhm.
pandemic boom. That was a great time. And because
Yes.
when I pay my earnest deposit to lock in the contract price on the big construction, I'm pretty much getting a 20-30% discount right off the
Right.
bat.
Right. Mhm.
And when the building is finished, then when the unit is ready, then it's worth more and you can flip it. But hindsight is 2020. But I should have held it. I should have held it long term so I can live off the cash flow. But it's okay, my money and then some. I just copied the blueprint of those $1 billion moguls.
Exactly.
Yeah, this is fourplex that I did my two
Nice.
fix and flip. So
Mhm.
yeah, my fix and flip took 12 to 18 months. It did not take 3 to 4 or 5 months for a traditional fix and flip.
Right.
But anyway, those days are over. And then in 2022, a couple of years ago, I bought another new construction, single family home, pre-construction in Central Florida. But this time, I'm holding long term. My main philosophy is buy and hold, buy new
Yes.
construction and rent it out for a long time to come. And that's what you guys are doing through my guidance as well. Anyway,
Mhm.
this is the house. This is a typical house, which I bought back in Central Florida a couple of years ago in Ocala, which
Right.
is close to what the villages, close to Ocala. I bought it for like 220K right now. 2 years ago, right
Mhm.
now it's around 264. Who you saying Florida is going through some troubles? No. You have to
Yeah.
know where to buy in Florida. All the doom and gloom, the world coming to an end news about certain markets is wrong because those are clickbait, very misleading. How housing crash grows, the doomers out there, they are distorting everything. So anyway, that's
Mhm.
either here or there. So my property have increasing value, and enough other investors that I help in Florida and Texas and elsewhere, even in the past few years, the value of their properties have not decreased. It
Mhm.
continues to stabilize, minor increase, but everything's fine. Contrary to all this, the world coming to an end, crash, correction to the
Right.
scenario, which is, as everybody knows, real estate is so cool.
Mhm.
Anyway, we'll talk about that. So therefore, so can you do in 2024? Can you find some right deals? Of course you can, right? And you know, talk about it all the time on our podcast. But for most people, staying on the sidelines and you will get crushed.
Right.
You will
Right.
get completely pancake. You will get crushed.
Mhm. Yes. True that. Mhm.
All the followers out there, the herd mentality, the blind leading the blind. Oh yeah, the majority of people staying on the sidelines, they're blinded by they have a tunnel vision. All they know is, oh, the mortgage rate is too high. Oh, the affordability is too low. All these stupid negative headlines. The blind leading the blind. You see those animal channels, those cows and
No,
bisons?
the National Geographic.
Yeah, National Geographic, when thousands of bisons they go, they just run around. Then there's a cliff. And the first of the bison, they fall all the way
Mhm.
100 feet
They'll
down.
all follow.
Then
Mhm.
all the thousands of the herd follow
Right.
to the doom and destruction, falling toward the cliff to the death. I mean, something very dramatic, right?
But yeah, but the point is taken. They do travel in herds, and wherever the leader goes, they're going to follow blindly.
So,
And that's what we do sometimes as
right. Yeah.
consumers. We follow the herd.
Yeah. So the majority of consumers, the majority of real estate investors, savvy real estate investors, as well as especially newbie investors,
Right.
they are following the herd. They are followers. They are not leaders.
Right.
They
Right.
follow the herd mentality, but you should go the other way. I know it's easier said than done, but
Right.
those people are in sidelines right now as we speak. Those investors, they're not investors. They want to be investors, but they are staying on the sidelines because they are
Mhm.
scared of everything. You're scared of everything.
Mhm.
Therefore, they follow the herd, the blind lead the blind. You know what's going to happen? Those people stay on the sidelines, and instead of investing right now, they will get crushed.
Mhm.
Squeezed, crushed down to nothing.
Yes. Yes.
And then
Mhm.
10 years later, oh, Mr. Yi, I should have listened to you. I should have invested in 2024. Too
Right.
late. Too late. Because you're
Right.
scared. You have no
Right.
courage.
Yes.
Go see the Wizard of Oz. Find yourself some courage. Or you're a scarecrow. Or you're a scarecrow.
Hmm.
Wizard of Oz. Follow the yellow brick road. Follow the yellow
Right.
brick road. Please.
My all-time favorite movie.
I lost count how many times I saw that.
I can sing all the songs.
Exactly. Follow the yellow brick road. Yeah. Anyway, if you're fearful, if you're scared, watch that movie.
Yes.
Wow.
Yeah, exactly.
Made it 1939. Judy Garland.
Wow. Wow.
Yeah. Do not follow the herd.
Right.
No, invest now. Okay. I mean,
Absolutely.
buy real estate and wait instead of wait to buy real estate. Again, let's hurry up. I don't want to spend too much time. But blueprint how to buy mostly buy new construction we can, although in the Midwest, but when Niagara Falls, we do buy older homes. We have nice homes.
Right.
If that's what you got, that's what you did. But it's okay. But new builds, in my opinion, is the best because better locations, higher quality tenants, low maintenance costs, not in flood zones, away from hurricane areas, no HOA, no condos, low insurance costs because new construction, you will get rewarded with very low insurance premium because, whatever. Okay. No state income tax, landlord-friendly state, emerging market, but in the path of growth where it is low affordability, entry-level homes for investors and cash flow with 20 to 25% down payment. So anyway, so we have some opportunities, Julie, that you can turn back the clock. If you missed the past 10 years of robust skyrocketing or your wealth doing was investing, I'm going back 10 years from back back to the future, the movie. And then buy those very inexpensive homes, new construction in Lawton, Oklahoma, 150K new construction you will not find anywhere in the country. I save you the trouble of wasting time to do research. And all the numbers are great. So new construction, cash flow property, even at 20% down payment. 20% down payment, you still cash flow nicely and everything else. Then of course you buy a duplex.
Nice.
Like Lawton, Oklahoma for sale. Look at the mind-boggling cash flow.
Very nice.
320K new construction duplex. This is mind-boggling. And at the end of the day, look, we talked about it many times. There's no asset class, not even come close to rental property because as you can see right here, read it for yourself. I don't have to repeat this 1,000 times. Okay.
Right.
Real estate is the best asset available in history of the world because there are 4 ways you can make money: cash flow, taxes, appreciation, using the power of investment loan leverage. And I created this new slide.
I love that.
40% of your wealth building in your income property are above the surface, above the iceberg. And 60% of the wealth or each of the rental property is below the surface. You can't see it. It's below the iceberg. 60%. And so you can see, you can feel and see the cash flow, money coming to your inbox, the rental income cash flow. You can see appreciation over time, but you may not see the depreciation, the phantom tax write-off. You may not see the fixed rate power of the fixed rate mortgage and having, or you can outsource the payment of your mortgages to someone by the name of your tenant.
Yes.
Yeah. They pay down your loan, the more over time, when you pay down the loan, you could have more loan to value, you could have more equity. Eventually, your tenant can pay off your loan, so you have pure all cash for your property if you invested long enough. And of course, all right. So that's called turnkey rental real estate profit. Okay.
Nice. Very cool.
And of course, you and I talk about this so much right now. It's fearful, it's unfounded, fearful housing environment. Too bad.
Right.
Lines. You and I are already greedy in a good way. And if you're savvy, educated, informed investors, if you want to follow my lead, you need to become greedy because everybody else is fearful. So
Right.
you buy now when there are little competition, you can get the great deals. Then when the mortgage rate come back to 6% or under 6% in the next 1 to 2 years, guess what? The floodgate can open up, giving
Yeah.
more competition. They can drive up the housing prices
Yep.
because
There you
right
go.
now, Julie, we already have high demand and extremely low supply of inventory as it is. So why did you wait to buy real estate when the competition comes back, when the demand or surge, when mortgage rate or inevitably going to come down? You could be competing against a whole bunch of people driving up the prices and all the deals gone. So right now, today is not the best time to buy in the history of your mankind. Okay, what's your final thought?
Oh my gosh, there was so much in that. I wouldn't even take up much time, but I think if they get anything out of it, I would encourage them to think about that contrarian mindset. You got to do your research. Don't just listen to everything you hear on YouTube, and then take action accordingly.
That's right. Buy your buy box, surround yourself with a good team, buy in a good locations, buy for cash flow, good into market, fast growing area, which, as usually we have those markets. I vetted those markets way before anybody doing that. As we control this, so if you see any value from this video whatsoever, please like and subscribe to my channel and also put your email into my newsletter so you can become a free member of our investment network. We will send you email updates about all types of real estate education for free so you can learn more and become a real estate investor. Thank you so much.